Hi friends, Swiggy's stock rallied by close to 40% in the unlisted stock market the moment SEBI approved its IPO. Also, it was in the news that big celebrities have been buying this particular stock. So the $1,000,000 question is that is Swiggy a hyped stock, a media hyped stock, or there is some genuine juice in this stock? As always, I'll give you totally unbiased data-backed analysis, and more interestingly, I will share the price at which I'm willing to buy Swiggy stock. So interesting video for you. Please watch it without skipping. With that, let's get cracking. So first hypercritical point is that Swiggy is a loss-making company as of now at the time of recording this video. In fact, in Q1 2025, company's losses widened to 611 crore rupees. Now you may have a natural question that Rahul, if the company is a loss-making company, why is it that people are willing to pay premium for this particular stock and why are they queuing up to buy this stock? See, the logic is very simple. People anticipate Swiggy to follow the path of companies like Zomato. So Zomato was unprofitable for almost 10 years and just 2 to 3 quarters back, company became profitable. Something very similar is likely to happen with Swiggy. Another example could be Policy Bazaar, where the company was unprofitable for more than 10 years and it became profitable just 2 to 3 quarters back. So the key takeaway is that companies that have built tech platforms and are operating on tech platforms like Zomato, Swiggy, Zepto, upcoming company as well, these companies are not profitable for first 8 to 10 years of their operations because they're trying to get customers onto their platforms. And the moment customers become habitual of these platforms, the discounts and everything are withdrawn and the companies start to make a lot of money. I hope this point is very clear that very soon Swiggy is likely to become profitable. So therefore, people are willing to pay premium or buy this stock right now. Now, the second hypercritical point is how is this company making losses right now and what is going on with the company? So for that, allow me 2 to 3 minutes of commentary and I'll tell you exactly their business model and where the money is being made, where they're making losses, etc. So have a look at my screen. You will see that Swiggy platform as such generated total gross order values of 35,000 crore in FY 2024. And I'll show you the data working everything. These are very interesting data points because we are going to use some of these data points in the valuations. So please listen to this very carefully. 35,000 crores of gross order value, which is the total revenues that the platform generated in FY 2024. Now, if I do the breakdown of this 35,000 crore, you will see that 68% of this 35,000 crore is generated by food delivery business, which is where people like you and me go and order food, right? Second business that Swiggy has is quick commerce, which is also called Instamart, which is very similar to Blinkit in the case of Zomato. Zomato acquired Blinkit, while in case of Swiggy, they had this in-house organic platform called Instamart. 27% of revenues are generated by quick commerce, which is the quick delivery sort of a service, right? Number 3 is the 5%, which is dining out, also called out of home consumption, where you go outside your home and consume a service, right? That's only 5% right now. And then you have fourth service, which is the platform innovation services, 0.5%. Let's ignore that totally. Also, they have number 5, which is separate to this 35,000 crore gross order value that I talked about. That service is called B2B supplies. Zomato also does B2B supplies. And in FY 2024, Swiggy generated around 4,700 crores of revenues from the B2B service, which is in addition to this 35,000 crores of gross order value. Now, if you compare this with Zomato, have a look at my screen, see exactly same business model. You've got food delivery, you've got quick commerce, you've got going out, you've got B2B supplies. Just that Zomato is much bigger and larger. Here you see the gross order value that Zomato did in FY 2024, same comparable period, 47,000 crore. So what is the takeaway so far? That Zomato is a much bigger company than Swiggy, and Swiggy is a loss-making company, and I'll show you very soon that Zomato is a profitable company. Now let me deep down into each of these business segments and speak about the comparison between Zomato and Swiggy, because this is extremely important for us to value Swiggy, because in isolation, if you do valuation for Swiggy, it will not make any sense. But if we keep Zomato as a reference point, it gives us a very good valuation metrics. Now let's have a look at the food delivery business of Swiggy versus Zomato. So if you look at Swiggy's business, you will see that 24,000 crore, these numbers are in millions, so I'm converting them into crores. So 24,000 crore roughly is what Swiggy did in FY 2024 when it comes to food delivery business, right? Compare this with Zomato. Zomato did almost 32,000 crore. So Zomato has a bigger base, right? Now coming back back to the growth rate, if we see in the last 2 years between 2022 and 2024, Swiggy's gross order value from food delivery business grew by almost 15%, while Zomato's food delivery business grew by almost 23% CAGR basis, meaning that Zomato not only is bigger in terms of the food delivery business, it is also growing at a faster rate, which is 23% versus 15% of what Swiggy has achieved in the last 2 years. If I now speak about profitability, 30th of June 2024 was the first quarter when Swiggy became profitable. There is a adjusted EBITDA is positive here. First time it has shown positive profitability when it comes to food delivery business. Zomato is already profitable when it comes to food delivery business. But more importantly, if you look at the contribution margin percentage here, which is around 5.24% or 6.40%, what does this simply mean? That if Swiggy is doing 1 rupee of sale, they are only earning 6 paise as a profit, right? While in case of Zomato, if you see, that ratio is around 7%. The contribution margin as percentage of gross order value is around 7.5%, 7.3%. So not only Zomato is bigger and growing better than Swiggy, it is also more profitable than Swiggy when it comes to food delivery business. Okay, Rahul, I understand that totally. What about the future prospects of food delivery business? Who is going to do much better? Is it Swiggy or Zomato? It will largely depend on two parameters. Number one is number of users that are transacting on these platforms. We need to compare that. And number two is how many restaurant partners do they have? Because these two factors are the supply and demand, and that is where the companies are making money. So if you look at Swiggy, as of FY 2024, they had 12 million users on their platform. If I compare that with Zomato has 63 million users. So that is 5 times more than what Swiggy has. So higher base is one thing, but what about the growth? In the last 2 years, Swiggy has added 14% CAGR basis number of users in the last 2 years. While if I speak about Zomato has grown their user base by 8%. So from a growth perspective, Swiggy is doing much better. But please understand, Zomato already had 63 million user base. That is a huge base. 5 times base. So this base is not going to grow at a rate that Swiggy is able to achieve. But overall, I see that right now, if I had to put my money from a food delivery business, I'll put it into Zomato because A, it's a bigger platform in terms of the user, in terms of the numbers, in terms of the growth, in terms of the profitability, right? Second parameter that we need to see is the restaurant partner. And have a look at my screen. You will see that in the last 2 years, Swiggy's restaurant partners have grown by around 23%. It was 196,000 restaurant partners as of FY 2024. If I talk about Zomato is again much bigger in terms of the number of restaurants, to 47,000 restaurant partners, growing at 17%. So here Swiggy is doing slightly better than Zomato, which is adding more restaurants at a faster rate. But again, Zomato's base is bigger than Swiggy right now. Now, before I speak about the valuation of Swiggy versus Zomato, let me also quickly cover quick commerce business, because this is an extremely important part of this jigsaw puzzle that we're trying to unravel here. And before I deep dive into the quick commerce business, let me also tell you that if you're liking analysis like these, you can become a member of my YouTube member community, because I post on a daily basis in-depth analysis of various stocks, mutual funds, ETFs, and various other assets that will help you improve your investing approach. The feedback of the community member has been excellent. Simply go to my channel, press on the join button and follow through the process and be my guest. With that, let's move to the quick commerce business. And as I said earlier, 27% of their revenues are coming from the quick commerce business. And if I just break it down for you, you will note that in FY 2024, Swiggy did around 8,000 crores of gross order value versus Zomato's Blinkit, which is 12,000 crores. So again, Zomato is much bigger, 1.5 times bigger than Swiggy when it comes to the quick commerce business. But if you look at the growth rate in the last 2 years, Swiggy's Instamart has grown by around 121%. Massive growth is what they have seen in the last 2 years. If I compare that with Zomato, Zomato has grown in the last 1 year. If you look at the data, it is by 93%, right? Now, if I speak about the profitability, please make sure that you understand that Swiggy's quick commerce business is a loss-making business. Very quickly, you will see that they made a loss of around 317 crores in the Q1 of 2024 versus Zomato, which has, if I talk about Zomato's numbers here as well, Zomato is a profitable business from a quick commerce perspective, only up to the profitability level number 1, which is contribution margin. You see it is in percentage, meaning that if they are having a sale of 1 rupee, around 3.9 paise is going flowing into Zomato's pocket as a profitability. There is a second level of profitability, which is adjusted EBITDA, which is almost at the break even, and Zomato is likely to see that profitability also unfolding in the upcoming quarters. But coming back to Swiggy here, they are making losses right now. For example, if I speak about the contribution margin, it is somewhere around 5 to 6% on an average basis. So if Swiggy is generating 1 rupee of the sale for their quick commerce business, they are putting the money from their pocket, which is around 5 to 6 paise. So please understand that this is a loss making business as of now, but in the future it is likely to become profitable. Okay Rahul, we understand this is the last 2 years of history. What is the future potential? Will Swiggy take over Zomato when it comes to the quick commerce business? The extremely important parameter to evaluate both the companies is the number of dark stores, because dark stores is what defines their business model, their ability to churn more revenues and profitability. Have a look at my screen and you will very quickly see that Swiggy's number of dark stores end of March 2024 was 523 stores, while if I compare this with Q4 of FY 2024, Zomato had 526. So neck to neck competition is going on. And also if you see in the last 2 years, Swiggy's dark stores have gone up from 301 to 523. Very similar pattern here, from 383 to almost 639. Zomato is slightly ahead in terms of opening the new dark stores, but it is a neck to neck competition when it comes to dark stores. But in my view, Zomato is going to do much better. Why? This is because, have a look at my screen and you will see that by the March 2025, Zomato plans to open 1000 dark stores, and in fact by the end of FY 2026 they plan to have 2000 stores. Now this is a very forward looking statement that the Zomato is able to make, although they're a listed player. From a Swiggy's perspective, I do not have this data. I do not know how many dark stores they will be able to open, and their future prospect of quick commerce business really depends on how many dark stores they are able to quickly open and quickly make them profitable. This is where it is a bit uncertain right now. Let's now move to valuation, because anyways I have covered 68% plus 27%, almost 95% of their platform revenues. There are B2B supplies which are almost 5%, 10%. So I think 80 to 90% business details I have covered in terms of both Swiggy and Zomato. Let's now move to the $1 million question, which is the valuation. What is the price, Rahul, that you are willing to pay for Swiggy right now? That is what I'm going to show you my workings right now. But before I do that, why don't you pause this video and let me know in the comments what is the price that you are willing to pay for Swiggy right now as we speak. I did the same exercise with my YouTube member community and I got very good feedback, some very good interactions, and these are the benefits of being part of a YouTube member community, that you get to learn from each other. So if you're not yet a member of my YouTube member community, please go to my channel, press on join button and follow through the process. You are going to learn a lot from this community as a whole, right? Now coming back to the valuation, first thing we need to do is have a look at the gross order value for Swiggy versus Zomato. So what is the gross order value for Swiggy as of FY 2024? We talked about it. It is 35,000 crores, right? And it grew by almost 32% CAGR in the last 2 years. While for Zomato, it is 47,000 crores. So almost 1.3 times of gross order value is what Zomato is generating as a whole, put together food business and quick commerce, right? And the growth at which it is growing is 50%, which is 1.5 times better growth than the Swiggy, right? So all in all, I can say that Zomato is 1.3 times bigger in terms of the gross order value. It is growing at a 1.5% faster than Swiggy. And thirdly, most importantly, it is a profitable business as we speak. Given these three parameters, I am willing to pay only half the valuation of Zomato, right? So I am rating that Zomato should be valued twice than Swiggy because of this growth that I talked about and it being a profitable business as of now, right? Future things may change. As soon as Swiggy becomes more profitable and more growth is there, we'll be adjusting our price accordingly, right? Now, how to go about calculating it? Very simple. Let me show you the workings as well. So right now, if we look at Zomato, Zomato's market cap is 2,42,000 crore at the time of recording this video. So I've taken that number here, right? What is the gross order value as of FY24? It is 47,000 crore. If I do a ratio of market cap versus gross order value, it comes out to be 5.14 times. What does this simply mean? That investors are willing to pay right now 5 times the gross order value of this platform as a market cap, which is the total number of units of the shares multiplied by the share price, right? Now we need to work out the same ratio for Swiggy, and that needs to be 50% lower than what we have seen in the case of Zomato, which is 5.14 times, right? See, this is one parameter I am using. You might say that I don't want to use market cap by gross order value. I want to use market cap divide by the adjusted revenues, for example, right? You're free to do that, but in my view, market cap divided by gross order value right now makes the most sense, because right now Swiggy is not profitable business. You can't really use PE ratio, for example, right? So there is a lot of complication right now to arrive at valuation. Therefore, in my view, market cap divided by the gross order value is a very, very good parameter to value these two companies, right? Now, how to go about calculating this for Swiggy? So right now Swiggy is not listed when I'm recording this video, right? So right now, the only thing I can go is I can go to the unlisted market, right? Unlisted stock market, right? And if you want to learn about unlisted market share as well, let me know in the comments unlisted stocks, and I will go and create a video, next video, upcoming videos about the unlisted stocks. But for now, in the unlisted market right now, the current price is 525 rupees per share for Swiggy, right? And the market cap is 1,11,461 crore, right? Now, if I take the gross order value, which was 35,000 crore as of FY 2024, same time period I am taking it, right? And divide this market cap of 1,11,461 divided by 35,000, the ratio comes out to be 3.18 times, right? So at 525 rupees price, 3.18 times is the ratio coming out, and it is on the higher side. We need to bring this ratio down. How to do that? So for that, what I'm going to do is this ratio should be 2.57 times at the maximum, which is half of 5.14, right? So what we're going to do is, for this ratio to be 2.5 times, the market cap needs to be 90,000 crores, right? If you do the reverse calculation, 35,000 multiplied by 2.57, you are going to get to the 90,000 crores of market cap, right? This is my valuation that I am okay to pay 90,000 crores of market cap valuation for Swiggy, which is going to be around 425 rupees per share as of now. So as long as the price of Swiggy share right now is less than 425 rupees per share, I think in my view that is a fair valuation. It is half of the Zomato's valuation. We have done some very, very good calculations using market cap, looking at the gross order value. These are the two very good parameters to use right now to compare Swiggy versus Zomato. Now, whether Zomato is overvalued stock or not, that's a altogether very, very different understanding and a different game, because right now I know that Zomato is also given very, very good rallies, and that is also because there is a good growth coming up from the quick commerce business right now. It is right now at the boom. There is a lot of competition. Zapto is also bubbling in the background. You have Tata's big basket as well. So there is a good competitive intensity right now. But if you ask me, 425 rupees per share is my price. This is how I have worked out. Please do not take that as a stock recommendation or a buy recommendation. This is a method of working out these, and I have used practical examples to drive home some important investing points. And if you like that, hit the like button. Let me know in the comments. A simple thank you. Also, lastly, I want to cover that there are people who are saying that I want to only invest in one of these companies. I want to sell Zomato. I want to have Swiggy. But please make sure that if you're exiting Zomato, then you're exiting at a price that you think that Zomato is overvalued, right? And if you're buying Swiggy, then please make sure that you have done some basic research of what should be your buying level, because what you don't want to do is you exit a stock which was okay valued or undervalued, but then you end up buying something which is overvalued, right? So please make sure you do some basic research about these two stocks before exiting. And also, in my view, both the stocks are good stocks because there is a good growth and there is going to be good market share for both of the players in the upcoming quarter. So it doesn't mean that you only have to stick with one. It really depends on your portfolio, your risk appetite, and many other factors, whether you want to stick with both of them, none of the stocks, or one of them. It is really your call. It is really your portfolio choice, right? With that, I hope you like this analysis. I've put in a lot of efforts to come to this point, have analyzed a lot of details. So I'm hoping that you've enjoyed this video, and if you did, like the video. With that, I'm going to see you in the next video. Until then, keep rocking.